Hello and welcome everyone. Steve here with TradeForexForProfit.com. Today is Friday, February 7th, 2020. It's 2:30 in the morning here my time, and we're looking at the AUDCAD. This is a trade that I opened up midweek, and it looks like we're about to take our profit target here. So I wanted you guys to see this as it unfolds. We are in, and again, these are all trades that are in the forum and out there in our midweek reviews for everybody to see when they take place. This is, let me show you guys. I'll zoom in. This is, whoops. All right, this is a push through this gap right here. You see this gap on the open 2 weeks ago. We finally returned to this area. We see a large bodied candle. We push through what appears to look bullish here, and then there's the engulf right there. We're taking out actually just one candle because this is not a doji. There's certain specific rules for that. However, we are taking out this candle here. Okay, but what's important in this is that we're also closing back below this rejection line. That is the line that's being rejected. And as you can see, a slight pullback was the entry for this bounce low, T2. Okay, here's T1, here's T2. And T1 is this push right here. Okay, where the market stalls out, you start seeing some wicks in the run. You got this bullish candle, bullish candle, bullish candle, then you start seeing the rejection wick, and then it pulls back, and then off we go again, and then we propel back to the upside. So this is a push point right here that we're trading as T1. So a slight pullback, I'd rather do that than go for an unrealistic target. And as you can see, pretty much 1, 2, 3, 4, 5, 6 periods that were at or better than the original entry. And there are ways to re-enter the market if you didn't catch this on the first candle. I kind of wanted to show you this. Well, I'm going to start pointing this out in my videos, and how often the market pulls back into your range of the original entry. And that's important because everybody asks me, hey, I can't get up at 2 o'clock in the morning and 6 o'clock in the morning my time and look at these trades, or I'm at work and I might miss one. Well, as long as you come in and you find these trades through the forum, through you're sifting through the charts, and we keep you up to date on the levels twice a week. So everybody's basically trading from the same level. And when you miss a period or two, a trading session, it's really simple to come in and set these entries up as they pull back into the entry level more often than not, and generally remain there for quite some time. Okay, so we'll let this one go. I don't know if we're going to take the profit right now or bounce here. Hopefully it moves on right on down through the 2 times profit there. All right, you guys, talk to you soon. Okay, welcome back everyone. Our profit target was reached just after we completed that video there, just directly after it moved right on through. So great trade and a great setup, but I want to talk about a couple things now. What's next, and how do we change our levels as the market continues to move, and the levels, as you know, are dynamic. How do we kind of mark those? Okay, now fear not, it becomes really simple after a few weeks of doing it and following along with us. I will give you my levels in the weekly review video, and then I'll give you my levels again in the midweek review video, so that going into the first half of the week, you have brand new the levels to trade from that match. Everybody's on the same page, and then going into the second half of the week also. Okay, so but how do I do that? Kind of a quick overview here, if you will. I look for places where the market fell and stalled. Okay, so right here we obviously came up short of this high. That becomes a zone. Okay, we move back up and then fall and get bearish again right here, leaving another top in the market, and I'm going to mark that. As we push down, this is a nice wick where the market stalled. Okay, it comes short of this area right here, and then it pushes back and then falls again and gets bearish. So I'm going to mark this high as well. Now I don't mark every single little wick that I see, or every time the candle reverses color. I don't get into that. I look for key areas in long runs where the market clearly pushed back, and then in this case, when we're marking to the downside, got bearish. Okay, so this stall right here that you see is kind of within the limits of this candle, so I'm not really interested in marking that one. Just, it would be like marking this one right here. Okay, I'm not going to mark here, here, here. You're going to really sloppy up your charts if you do that. Look for the key areas where there was big pushbacks and then complete bearishness again, or that would be the opposite when you're moving to the upside. So these are bounce points. There's also breakout points. All right. And we'll get into that later when I see when I'll mark it, I'll show you. But at this juncture, what are we looking for next? So now we have our levels if we're going to catch a buy trade that we're going to be trading back to for targets. And when the market returns to these levels, they also become tradable levels on the chart where we're going to take trades from. So we trade to them as targets and we trade from them as levels of key resistance or support. So now at this juncture, let's back up here, and I'm going to kind of show you something here where this is where the market moved through. We come back, we stall out, we go flat, and then there's a lot of time that moves on before we return to this level and push through it. So this is, because of what you see right here, this is a new level. So let me mark this so that it's clear. From right here over, this becomes a new level. And the reason I want to distinguish that is because of what we do after two moves through a level. And let's talk about that. Now, here's the first move through this key level. Here's the second move through. So what we're watching for following two breaks of a level is either we're going to take an immediate trade from it or we're going to avoid it. Okay, and this we get into detail in the members area. Don't worry, this is just a quick overview. Within a few candles, I want to see a rejection. And in this case, as we pulled back right here, if we're going to see a bearish rejection of this area, it's going to have to reject that new high, okay, within a few candles. So I'm about to, when the market opens, after a couple of candles, this level will just be void if this doesn't happen, if we don't push above this level and catch a bearish sell signal. All right. Secondly, we would move within a few candles back inside, break back inside, and then catch a check this way. And that didn't happen clearly because we've already touched that level and then we didn't break. And that, again, we discussed that in the members area. It's a real simple concept once you get used to doing it. So what I'm looking for now is either A, move above here and a sell, okay, or B, I'm looking for this low to be taken out. We're going to trade this line right here. And since we've already moved through this level, if we catch a bullish signal, it's going to have to take out this low here and then close back above this high with either any one of our signals that we have. So that's kind of what I'm looking at in the immediate future on this pair. If that doesn't happen, we're going to have to move down, catch one of these lows down in here, or move back up into this high and trade from there. Okay, so you guys, if you're interested, come over to the members area, check us out. We have a lot of free information. TradeForexForProfit.com, and just on the home page right there, there's a free section. When you get through all that, if you're still interested and you like what we do, sign up in the members area. We have a live forum where you can post your questions, you can interact with other members, and we hope to see you guys on the inside soon.